you've been wanting to get into crypto trading, but you find it hard to start, or it's not been nearly as profitable as you would have imagined, make sure you watch this video through, because today I'm going to show you guys an opportunity in crypto that has recently been making people crazy sums of money, and it's actually pretty simple because it's all automatic. And I know that might sound a little bit too good to be true. Now in this video, I'll also tell you guys the risks and negative sides about it. But the reason it works so well is because we're in a bull market, a bullish narrative. And for that reason, the strategy, which I'm about to show you, works so incredibly well. And even though you don't actually officially need bots, automation is obviously a lot nicer. And so I'd say, let's dive right into it because it's pretty cool. Anyway, to apply this strategy, you're going to need yourself a crypto exchange that has some bot functionalities. Again, you can do this all manually, but bots just make it so much easier. And again, for the tutorial, I'm going to use Bybit, but there's multiple other exchanges which are nice too, and I've got them linked down below. One of them is OKX. Just check it out with the link down below and get yourself an account because there's also crazy deposit bonuses, which are nice. Having said that, once you've made yourself an account and you perhaps have got some USDT, some crypto dollars on there, there's a button here that says Trading Bot. And just for fun, on a place like OKX, you'd find it under Trade and then either Trading Bots or just go to Futures, any one of them, and you can find it right here over at the bottom. And then the specific one we're going to go for is Futures DCA, and our bot over here is running at roughly 21% profit. And on Bybit, I've got a couple of ones that we opened together earlier on the channel with slightly less money in it, only $100 for 3 of them and $300 for one of them. But the profit is also significantly higher. As you can see, 112%, 134, 240, and 40% respectively, with again the idea being roughly 1%, if not slightly more a day. You can see this bot has been running for 34 days at 37% profit. This has been running for 106. It's done a lot better. 240% profit. This one has been running for 110 days at 134% profit. And again, 110 days with 112% profit. The OKX one is actually the worst performer with 38 days of running. We also opened this account together during one of the videos earlier and roughly at 22% profit. But the number will deviate a lot, and I'll tell you exactly why. But of course, let's explain first what the strategy is and what the bot really does. So getting towards the bot trading here, there are a couple of different options: Futures Grid, Futures Martingale, Spot Grid, and DCA. DCA being dollar cost averaging. I notice I'm a little bit small here. I'll just take away the camera so everybody can see it a little bit better. So DCA in this case stands for dollar cost averaging. And what it simply put does is it invests on autopilot regardless of market conditions, sustainable in bull and bear market. Now what it does is, let's say we have a starting price of $60,000. It's going to start buying 60,000, and then as it comes a certain percentage, for example 1% lower, it buys again. If it goes another 2% lower, it buys again. Another 2% lower, it buys again. Another 5% lower, it buys again. That way your average cost becomes lower and lower and lower. And so the moment there's an upswing, let's say you start at 70,000 and you've bought your way all the way down to 60,000. Maybe your average price is now 62,000. And so the moment it goes from all the way down from 60,000 to 65, instead of you only buying at 70 and you not being at a loss of 65, since your average price was now 62,000, the moment it goes to 65, it can sell and you're in massive profit. That's the core principle. And Futures Martingale is actually basically that, but with significant leverage potentially. Spot Grid and Futures Grid, what they are is they buy low and sell high automatically, or the opposite. They could do the same sort of with shorts. Well, for the most part though, you're trying to do both. And I gotta quickly explain what longing and shorting is, because that's what this whole futures is about. And that's basically all I do. But with longing, what you're basically saying is, hey, if the price goes up, I want to make money on that. The core principles behind it, I want to explain, but it might make it more difficult. So just remember this: with long, as price goes up, you make money. With shorting, as the price comes down, you make money. The leverage being, if I only wanted to trade with $1, I could actually leverage it to act as more money. This is because of borrowing, but you don't have to fully get that, or you can just look it up on Google, because the idea is still, as long as you're doing things in an isolated fashion, if you put in $1, you can leverage it, but you can only lose $1. But what it will basically do is, let's say you want to leverage it 10 times, tenfold, your $1 is going to act as $10, meaning if the price goes up 1%, well, it actually is 10%, meaning you make 10 cents. If the price comes down 1%, you lose 10%, so 10 cents. But that would also mean that you can only catch a 10% wave towards the downside, because obviously that $1, if you leverage it by a tenfold, it's acting as $10. But if the price goes down 10%, thinking about it, 10% of $10 is $1. That means your dollar is now finished. On the opposite side, if the price goes up by 10%, since you were leveraging it by tenfold, it means you've basically doubled your money from $1 to $2, which is nice, and that's the core principle behind futures. With shorting, it's pretty much the same. If we start out at a Bitcoin price of 70,000, we can basically say, hey, we expect prices to come down from here, so we open up a short. The idea being that you eventually, you basically open a position and you buy the position back later at a cheaper price. You make the money on the price difference. Doesn't matter. It's just price goes down, you make money. If the price goes down 1%, but you had 10 times leverage, you make 10%. If the price goes up though, that's when you lose. Core principle. And with grid bots, it's basically longing and shorting. As prices come down, it tries to keep buying more and more within a range, within a grid that you set. So a bottom price and a top price. And as the price goes higher and higher, it opens more shorts. So that means if price comes down, you keep adding to your longs. So every single time you get a lower price for your longs, and that way, as the price swings up a bit, you make money. And as the price goes higher and higher, it keeps adding to your shorts. So the moment it drops, you make money on that again. When this is most profitable is when Bitcoin is trading in a certain range, because that way you can keep catching the waves up and down. And the moment it's bad is when you are in a crazy bullish season or crazy bearish season, a bigger trend, because that way the swings are less easy to predict, and so you're more prone to lose or be in your positions longer, or you have to just basically double down so many times that it becomes annoying. With DCA, there's not as much of a risk because you're not using any leverage, so you're just using the money that you've got. You can't really get underwater. And with futures martingale, the only, again, annoying thing being that you're doing this with not enough money, basically, or you're over leveraging, which can all be fixed with proper management, though, to be honest with you. Anyway, so to get back to it and kind of explain what we've got going on in both of these pictures, or at least this picture for what it's worth. What we've opened here on Bybit ain't perfect. It's a little bit better over on OKX, I'll tell you, but a lot more people that I know use Bybit, and percentage-wise it's been way more profitable, but I'll explain. By the way, there are a couple of other bots that you can actually use that are either pre-made or you can copy trade as well. Matter of fact, you can even copy my OKX bot pretty simply. I'll show you. If you go to trading bots and then press marketplace and give it a little second to load, you can go down here, type in, I think Dusty, and you'll find my bot right here, Dusty Trades Bots, and you can just see everything for yourself. You can see the maximum draw, you can see everything. Anyway, so let's go to Bybit. All right, so the one we're gonna go for in this tutorial is Futures Martingale. You can go for any one and just try it out for a bit and read up on it. Why not? You can use some picks that they've got, that Bybit has got themselves. Don't attach yourself to this APR too much. Obviously, if times change, the APR is different. And recently here, the Futures Martingale for shorts has worked best because Bitcoin price has been going down, but we are mostly just using these longs. And again, we're not using an AI strategy, we're using manual, but you can just play around with this for yourself if you'd like. And again, if you want to, you can actually back test the scenarios as well. And you can see based on a 14-day back test, this strategy is suitable to run for 14 to 30 days. It's probably giving you this if the scenarios are pretty similar to the last couple of weeks. But once more, you have to check this out for yourself. If at manual though, again, the one we usually do is long, but grid bots also work really, really nicely. I'm just giving you one example here of a tutorial or of a bot trading strategy. There's many. And if you guys are more interested in them, just let me know. And if you want to do grid bots, for example, there's also a little button on the top that says guide. It'll lead you to an article that will explain more about all the buttons and what exactly it all does, if once more you are interested in it. And it even explains it for futures, so that's definitely quite nice. But my bot usually works like this. So you go to manual, And then I'll just show you the settings here for a little second on the newest bot I've gone for. And you can see the percentages are different here because every bot has slightly different settings. This is, for example, the other bot I've gone for, and I'll tell you some of the negative sides of Bybit over other exchanges. Anyway, this is the most recent. So price decrease 1.6%, position multiplier 1.2, additions made maximum, again in this case you're being 10, profit target 3.4%. This could be slightly changed if you wanted it to. And I guess any of them can be changed if you've got a different risk preference. So as we go to the bot, again, we go for a long bot. This works best when your market is generally speaking quite bullish. So bull market, shorts work best in a generally speaking negative market. And grid bots, since they can be neutral, work best in either sideways, well, depending on what type of grid bot you use, but mostly sideways of a market. The leverage, you can also decide for yourself. You could even do it very low or even just a DCA strategy, but I usually go for 10x. There's a minimum investment in this case here, but it's not that high, 262 bucks. And your entry price, if you specifically want a lower price, you can put it in, or if you want it to stop at a loss somewhere, I don't input those realistically. And you can see there's also a button for smart fill. And the reason this works sometimes is because they make these numbers make a little bit of sense. The only problem is the max additions. And what I mean with that is, let me explain every single thing you understand actually. So the price decrease, as the price of Bitcoin or whatever asset you're doing this for, in this case here Bitcoin, you can probably choose anything you like, but I think Bitcoin is safest, comes down 3.3%, it buys, right? It starts to open a position. And let's say we started out at $70,000 and we put this at 10%. This would then buy again as the price gets to 63,000. Now, the position multiplier basically means that instead of just buying $1,000 worth, it's now going to buy $1,200 and so forth and so on. You can see here it refers to investing X times more than the last buy-in, ranges from 1 to 2, with 1 meaning no change and 2 meaning each subsequent investment is double the previous amount. The rounds basically are every single time you start your first buy-in to you selling, and the max additions per round is how many more times you can go down lower and buy again. And the profit target meaning, how much profit do you want to take before it starts to sell. Achieving this doesn't mean the bot will stop. It just depends on whether or not you have the enable loop button on. And that's the button right here. It just basically means, do you want to only, basically buy in, go lower and sell once, or do you want it to keep continuing on forever? I basically have it going on forever. And this one has done 11 successful rounds and is now on its 12th. This one has done 205 trades though, or 205 rounds, a lot more trades, and is at its 206th. And you can kind of get the pattern here. This one has done 208. And my other one has done, let's quickly check this out, has done 42. So I obviously leave that turned on. And this is where the kicker comes in. So the reason, if you're looking at these bots, why these are a 10 out of 10 is because if we go to details, which is important here, and we go to show more, I want you guys to understand everything that's going on here. The mark price is the price that we are currently at. The average holding cost is the price average that we've bought at. So this supposedly is going to go down every single time it adds another position, which we'll get into in just a second. The position balance is how much money is in the trade. The remaining margin is how much more it can use. The leverage is basically how much more money is in your position versus how much you've put into it. In this case, you're slightly below 10x. And the most important things basically happen at this positions tab. So as you can see, we basically had ourselves an open position order at 60.992. And now what it's got here is an open order that's not been filled at 60,016.9, because that would be, let's check it out, 1.6% lower than our original buy-in here at 60.992. And we also have a take profit order at 71.342, because that would be our 3.4% profit. But anyway, as we buy, let's say for example, we hit $60,000 first, our average price would go down from the 60.992, which is basically our original buy-in, to, let's just say, if it were to be the exact same number, it'd be 60.5, but it's going to be slightly lower, let's say 60.3K. And so then it opens another add position order and another take profit order and cancels this one because our average price is now lower. So it'd take the take profit from the newer price, right? The newer average holding price that we had got, which will be a lower average holding cost, because it's going to basically take profit 3.4% from the average price. And so the problem with Bybit over another place like OKX is honestly because there's a maximum in the amount of additions you can make, and thus it can sometimes be nicer on Bybit to put the price increases at, for example, 3%. Every single time the price comes down 3%, it adds, instead of very low numbers like 0.8 or whatever, because otherwise you might get stuck like the positions here, because it can only basically go down, let's say 10%, 20% or so before it's at a maximum. So that works when the market's really, really bullish. You don't get corrections more than like 15%. But if you open one of these positions, it basically bought its first order at 70.3 and was able to go down all the way to 68.7, but it's still wanting to sell at 70.2. And since normally, right, if this had more orders available, it'll just keep going down. And right now the average price would maybe be 61,000. So it might be able to, sell at 61.5. Because it's not allowed to make more orders or add positions, the average price is still relatively high. Let's check it out. The average price is right now still 69.2, so we're underwater. But again, those bots, the first three that you're seeing right there, are basically just made for fun to quickly see how it would do on Bybit and how the settings would work. But since the market turned so bullish, I decided to keep them on. But I would never recreate those settings again, because it has to, in my opinion, be able to withstand about a 30% drop or so, which is what you can see right here in the OKX graph. You can see that it came down so much because the Bitcoin price crashed by a significant amount. But if we go to OKX and we go to futures grid, let's just quickly go there, then check out our bot. You can see that here we have 13 maximum orders and we've only filled 4. How is that and why is that? Well, that's because this one was able to add so many more additions, similarly to this one also, because it has a wider spread. Let's quickly check this out. It has a wider spread of 1.6% of a decrease. So where prices came down very, very hard, you can see it was able to just open new positions and still turn it into a profit. And on OKX, you can see there's even sometimes only 8 minutes worth of a cycle, or here was only 15 minutes. But basically that the price, or average price, was able to get down really, really low because some of the later entries, in this case here, only 8 were ever filled. And I'm not sure if there's ever been more than 8 that have, no, I don't think so, that have ever needed to get filled. And that's again because of proper spacing. And so even when the Bitcoin price went from 73 or whatever thousand to 56,000, it was again able to withstand everything just fine because of proper spacing, and was able to buy that dip, get our average price. I'm not sure when this actually was. Perhaps it was like somewhere in the middle here. Let's just say it was able to get our average price really, really low. And if we're taking a look at some of the pending orders, again, I put my spacing really, really wide here to make sure that we can go all the way towards, as you can see here, 48,000, still be really, really fine, because that will be our last order. We can still then go significantly lower before I'd have any issues with either liquidation or whatever. And again, as a last resort, and this is one thing many of you guys should understand, you can add more margin, so you can add some more money to the trade to make sure it can stay open forever. And that's basically what you have to do with these bots every now and then, in case you get a massive crash. And the risk also here with the bots, for the most part, being that you get a crash of, let's say, 20% or 50% in a day in an asset. If that happens, perhaps you're not quick enough to add more margin so the bot can be sustained, or perhaps some glitch happens and your orders don't get filled. If you then did not have enough money to basically make sure you keep buying your way down lower, that's when things go wrong. So once more, this works when the market's generally trending upwards. It doesn't really work well when the market's generally trending downwards, because then you're in your positions for significantly longer and it's just more annoying. Does it still work? Yes. Theoretically speaking, it can always work, but sometimes because of funding fees, which at that point actually do get cheaper, by the way, you might actually get paid to have these positions open. But if the market's still a little bit too bullish, but mostly still downwards, though, it might get a little bit expensive, might be annoying, yada, yada, yada. But the strategy, as you can see here, this one can go all the way down towards 48,000 without any hassle, without any trouble. And you can see how the amount of money that it keeps buying is going to keep getting higher and higher and higher to here the order. So the amount of a position it buys is 0.17 Bitcoin in comparison to 0.04 BTC right there. So the lower that this actually goes, the more money we'll ultimately also make. You can see here, this was only one addition. We made $34. Here it made 8 additions, so we made $165. And again, if we look through, every single time it fills nothing, we only make 19. If it fills 1, we make 33. And so we basically want there to be bigger swings, but ultimately a little bit of upside. upside. So we make more money because we have a multiplier on every single buy. But that's also because ultimately, like I said, the invested margin in those is also higher, meaning we have more money in the trade than with a lower safety order fill. So this was just, we put $250 in the trade, it made $18, boom. Here in total, we had $2.3 thousand in the trade, it made us $165. Right now, for example, we got $1,000 in the trade and we're still at a negative, but again, we have a lot of orders pending. So right now, if the price goes to 60.078, we're going to buy again 0.04 Bitcoin. If the price goes to 58,000, we're going to buy again. If the price goes to 51, whatever thousand, we're going to buy again. And so upwards all the way towards 48. I could put, 99 safety orders to go all the way towards $1 a Bitcoin. So in theory, we could always win. But in my book, I prefer to do everything manually as it gets towards the 48K price mark. Or I might want to do a couple other strategies, like for example, turn the futures position into a spot position, but basically selling the position, but having the actual assets still remaining, or basically double down at a certain price point if you find the price move down too much, just like how we did at 56,000 by opening some additional long positions on the side. You could enter it into the bot though if you wanted to, but I'm just giving you guys some ropes here to get started, get acquainted a little bit. I think from here, you'll probably figure out some other cool things to do. If you want the settings for the bot, you can see everything right here in front of me, I think. So you can just copy it from what it says right here. Once more, not your financial advisor. This is what I personally use. There are downsides. I've just explained some of them. And you got to understand that if the market does a really big dip, you're going to see it also, right? You're going to see it in your bot. But generally speaking, since I started this one, and this is not the first bot, the general curve is upwards as long as Bitcoin doesn't make a big poo-poo on top of your head. In total, this bot's got about $5,000 that I gave it to trade with. It's never used all the $5,000, not even close, not even half, I think. We've already withdrawn about $1,600 worth of profit over the last month from it. But because our position right now is slightly underwater, because again, we're waiting to open another position, our total P&L is slightly lower. And again, sometimes this number can get a little bit higher if prices move lower as in more of a loss if prices move really, really quickly, or there was an error with opening the orders, etc. But usually it's because, again, between, let's say here, 53.1 and 51.5, there's a pretty big gap in the middle. And as your position gets larger, that also might look as if you're making a big loss. But here it says that our liquidation price is about 32,000. So as long as the price doesn't get towards 32,000, we are fine. And if we get close to those levels, just have to take action. But hey, that's about it. I've got 2 links down below to OKX and Bybit. You can check those out for yourselves. If you guys want another tutorial on how to do the grid bots, just let me know down below. I thought this was just a good little introductory video just for fun, but there are a lot of cool algorithmic trading or trading bot or other cool videos that I can make that I'll probably do over the next few weeks and months. So if you enjoyed it, make sure you press that like button, and I'll probably see you guys again in another crypto video. But make sure you check out the links down below for cool bonuses, and that's about it.